one of the big things that people don't realize is that your billing, your payment plans do have an impact on your premium. And what I mean by that is a lot of carriers now out there, they really will credit your policy if you can pay that policy in full.
Really? I don't think I even knew that.
Yeah.
So like it's lump sum versus monthly.
Right.
So you get your auto bill. You know, it was $500 a month. It's what, $6,000 a year.
Yep.
The bill comes in the mail. You go online. You pay the $6K. You know what would be like
10%.
Really? That's pretty good.
It's enough to at least give it some thought to say, and it's not for everyone because not everyone can just peel off.
Most people aren't in a position to do that.
Right.
But also the people that are really concerned about $50 or $100 a month, in that same example, you knock off 10%. I mean, you're saving some money. Yeah. You're saving $50 a month.
Well, and then you put on a credit card and then you get some rewards and then you just pay it off. Maybe you pay off your credit card, or maybe you are in the mode of, we build up credit and then we pay it off. So
yeah,
that may be an option.
Good idea
for some people.
Welcome to the podcast dedicated to real estate, insurance, and building your business. Join us as we take you along our own business building journeys with additional wisdom from our network of local and national experts. Welcome to Bricks and Risk. Hey everyone, welcome to another episode of Bricks and Risk. I'm Tim Garrity.
And I'm Sean Mooney.
Happy New Year, man.
Happy New Year, 2025.
Welcome to the new year.
Here we are.
But yet I'm looking at an old shirt.
Yeah, a little repurposing.
A little retro action?
Yeah.
All right. All right, dude. Well, this one's going to be a little bit more insurance focused today, guys. So why don't you tell us what we're talking about?
Yeah, so the environment right now with insurance is price. Price is going up and people having to deal with that. So what we're going to talk about is some different situations and scenarios of what we're seeing in the marketplace from a whole host of carriers and what's going on and kind of what we're seeing on a day-to-day basis. And then maybe some tips for some people about what they should and shouldn't be doing, just as recommendations in terms of how to deal with the current status of insurance.
So it sounds like this one's going to be educational from a consumer standpoint, but it's also going to be educational from, like, let's say an insurance rep standpoint or even a business owner standpoint. Like maybe they don't deal with this as much as you do. And we titled this one appropriately. We called it Don't Knee Jerk Your Insurance Coverage.
Yeah. And
all right, so here's something I'll start off with that name. Again, we like to insert humor into our episodes, as everyone knows at this point. Explain knee jerk. Why would someone knee jerk their coverage?
Well, I don't know if it's knee jerking their coverage. The knee jerk is more of a reaction. So given the scenario where the policy or policies, your insurance package is coming up for renewal. So they usually get sent out 30 days prior, 45 days prior to your renewal date. You get in the mail, you open the mail, you fall off your chair because the increases are coming through at a clip of 20%, 25%, 30% more, wherever you're, different areas are seeing different increases. So the knee jerk is, oh my gosh, my insurance just went through the roof, compared to what it was a year or two ago. And the knee jerk is, I'm going to find cheaper insurance.
Yeah, it's a commodity. Insurance is a commodity.
I'm going to cut my cost. I'm going to solve this problem on my own.
I just got to make some calls, shoot some emails, fill out some contact forms, and I'll get my insurance down.
Yep.
Okay. So we're talking about the knee-jerk reaction. So it's like the environment we're in, people's monthly bills are going up. I mean, Sean's been talking about it since we started the podcast because we've been in that environment for the last year, which is about when we started recording this.
Yeah. In a dramatic way. Not like minor increases. We're talking about sizable.
Yeah, like if you pay like let's say $500 a month for your insurance
Yep.
and it goes up 20%, it's $600 now.
Yeah.
Like that's serious. $1,200 a year.
And roll that over the course of 12 months. Yep.
And let's say someone's job is slower, or they just had another child, or it's just income is tight, whatever it is. Things are expensive still. Housing is expensive. Cars are expensive. Groceries.
Yeah.
Your bill goes up $100 a month. People are going to panic.
I don't know about panic, but they're going to certainly say, can I do better? Where can I get back to where I was, or even in a better position financially?
All right. So let's go back to that scenario. Someone gets the mail. They open it up. Your bill goes up $100 a month on your car insurance, which to some would be a big deal. And they have this reaction of, I have to get that down. What are some tips, or like, let's call it, what's an approach rather than have that reaction, which 99 out of 100 people are going to have? Your bill goes up. You're going to be like, what the hell is going on?
Yeah.
How would you advise people approach that so as to not make a rash decision or do something that could even affect them having coverage?
So let's start with what you shouldn't do.
All right, let's go. We're going glass half empty moon. What should you not do?
You should not, step one, call your agent and start throwing profanities at them.
All right, so this is a cue for everyone. Give Sean a call tomorrow and use any choice words that you want. Okay.
Profanity laced.
Got it.
This is BS. You're BS. This insurance company. This is we document these in the office, and and
like
just
your shirt's BS.
Obeys BS. All of that. But no, seriously, is we get that reaction a lot, right? And we have people that will write their insurance in a year, and we deal with this increase, and this is BS. I signed up and now the rates are going up, right?
Yep.
And so we as a broker don't have any power over the pricing.
Yeah, you don't decide the pricing.
Nope.
You can look at carriers.
Sure.
And find options for people,
Yep.
but you're not you can't control. You can't say, I'll make a little less this month. Like, go ahead. Yeah, here you go, Bill. Here you go, Sally.
Yeah.
Like, take a little break on me.
Yeah.
Like, you can't do that.
And so we're getting hammered every single day just by way of, everyone's bills are going up. So my recommendation is don't do that, because when you do that, it's like your broker's less inclined to want to make all of the appropriate moves to try to help you, because it's just a bad footing.
Let me put it this way. Let me know if I'm right. You're kind of passing blame to your insurance rep, your insurance broker, whoever you're working with, to be like, why is this why did you do this to me, kind of thing, which is a natural reaction.
Yeah.
Most people would have that reaction.
Sure. Absolutely.
But you're saying, look, as much as you think you can control it, Mooney Insurance Brokers, you can't. So rather than look to you and say, like, look, don't shoot the messenger. I'm your ally. I'm your advocate. How can I help you navigate this issue?
Yeah.
All right. So they shouldn't obviously use profanities. What else should they not do?
So the other thing they shouldn't do is go online and find one of these insurance, we'll shop you with 100 companies websites.
Yeah, someone looking for data, basically.
Putting in your information, and we represent 100 companies. We'll find you the best rate or the cheapest insurance or whatever that may be. Don't do that.
Okay, why would you not do that?
Number one, they're just scraping your data. You're going to be put in some call center. Your information is going to be shared out. It's going to be sold. You're going to be put on a list. You're going to get 20 emails and 50 phone calls, and it's going to be this
like whirlwind of just like stalking, like internet stalking.
Yeah.
All right.
So you don't want to do that, because it's all of the things that come along with it.
Anything else they should not do? Or can we get into the Garrity glass half full?
I think
I got plenty of beer in my glass.
I think just stay. I think the wrong approach is, number one. I think the wrong approach is, okay, my bill went up. I got to get cheaper insurance.
Yep.
You should try to stay away from just looking at the policy, looking at your coverage, and just zeroing in on what the price is.
Let's talk about, I don't want to veer off too much because we're on this, what you shouldn't and what you should do.
Yeah.
Why is cheap sometimes a disadvantage for the person getting the cover? Like, why can cheap be a red flag to someone says, hey, your bill went up $100 a month. I know that sucks. What if I could lower it 100? You were at 500. You went to 6 with Sean. What if I could get you down to 4 with me? I'm Billy.
Well, it's the perfect.
Insurance.
It's the perfect. You see the advertisements on TV is like, name your price, or we get the coverage you need.
Right.
Right. So they're trying to build out the policy around the price. And so why that might be bad is you might pay less. Well, what comes with that is typically less coverage.
Yep.
And so this is where we get into the price versus cost.
Yeah, jump into that real quick because this is a good part to get in that.
And so the price is your premium. This is your monthly premium. This is what you pay. This is what you're out of pocket. The cost is everything else associated that might come along with your insurance coverage beyond what the premium might be. Meaning, you sign up for that new policy, but you don't have the same coverage, right? So your premium might be less. But if you get into an accident, maybe there's collision that's taken off of one of your vehicles.
Right. Yep. And that's the reason why it's probably cheaper.
Right.
If something happens to you, which could be common in the driving world, now there's a big surprise.
Where you're convinced, oh, you don't need that. Your car's older.
Yeah, you're fine.
So now what might have been saving $50 a month on your premium for that price, you might be at $10,000 because now you have to go out and buy a new vehicle.
Yep.
So that would be, if you're looking at the total cost of insurance and what you could potentially be on the hook for in an event like that.
So like let's relate it to homeowners insurance, so real estate.
Yeah.
You own real estate, you got investment properties. Even if you rent real estate, tenants get insurance coverage. So relate that to real estate. Same kind of scenario. Someone's offering them a lower monthly premium to insure their home, let's say. Let's keep it real simple.
Yeah.
What kinds of things could go wrong with your home where that cheaper premium, that cheaper monthly amount could affect you? Like what kind of
perfect example would be you have a homeowner's policy, and one of the common optional endorsements that we always try to put on is a backup of sewer and water coverage.
Go back to the Reed Stever episode.
Yeah.
He said he mentions that to every single person he meets for an inspection. Get the coverage.
Yep. And so we try to include it on every policy. We have it, baked in. It's optional, but we just
this is how we run our business.
Yeah. As a templated coverage, right? So you may find that new policy for homeowners. So if we have coverage on your policy for $50,000, right? And cover interior flooring, cover some personal property.
Drywall.
Right. You take that new policy and they don't have that coverage. And now your premium went from $1,500 a year now to $1,000 a year, right?
Yep.
But that's excluded now because it's an optional thing that they don't have included. And you have a claim, and there's a loss, and there's a backup, $25,000 worth of damage inside your home. But now you're eating that, right?
Yeah. So you're like, well, you were saving maybe $50 or $100 a month. Now you could have $50,000 worth of damage.
Yeah.
That's what can happen. Your sewer pipe backs up. Like, let's be honest, whether your basement's finished or not,
doesn't matter.
You got stuff down there. You could have photos. You could have, memorabilia. You could have like furniture. You could have electronics. Like, it's like, hey, my basement's a catch-all. I'm going to throw it down there. My my kid doesn't need this toy anymore. It's like, hey, we'll use this TV in a year or two once we do this. Like, you could lose all that.
Even new homes, we see like in new townhouse communities.
Yeah.
Where the plumbing and everything is tied in together, even though it's new, the propensity for something to happen when you have like a cluster of homes that are tied in together can be even greater. So a lot of times people say, oh, my house is brand new. I don't need to worry about it. And it's like, well, you may want to reconsider that.
All right. So
So home, auto, it's kind of the same.
Yeah.
Where you're looking at, all right, this is your price. And then this is, the total outlay of what your cost could be.
All right. So we talked about the things you shouldn't do.
Yep.
Then we talked about price versus cost.
Yep.
Let's go Garrity style, glass half full. What you got on the things you should do.
So
advice.
The best approach I can say to people is start with looking at your broker as, like you mentioned, your ally, right?
Yeah,
Almost.
You're my boy too. So
Yeah.
You're my boy, Blue.
So it's like a team effort,
Yeah.
right? Like, so my, recommendation to people would be a pleasant email that's not
if only the world was so easy.
vulgarity interspersed there. But reach out and say, hey, listen, I got my renewal in the mail. This is crazy.
Yeah.
We renew in 30 days. Do I have any options?
Yeah. What do you suggest? You're an advisor. Just like I'm an advisor in real estate, life decisions, like buying, renting, investing in real estate is a big decision. Again, partnering with someone for insurance, whether it's just a home and auto, or maybe home auto business. And let's say you have like art or like jewelry and stuff like that. Like, this is a big part of their budget and lifestyle, because having someone you trust when things go wrong, when things go well, they're not going to call you and be like, yo, dude, everything's great. Thank you again so much.
This is awesome.
It's a thankless job.
Yep.
Just like in real estate. It's like when people love their home 6 months later, they don't call me up most of the time and say, Tim, we are just thank you again. No, it's more in the moment. Like when it happens, they're very appreciative. I'm very appreciative of them. I follow up. But, it's after that, they're living their life.
Yeah.
It's when things go wrong. When something goes wrong in insurance, they're going to go right to, like, that morning, that afternoon, that evening. They're going right to you, right for the jugular. And they're like, dude, what is going on? What did you do? And so you're saying should is one of the first things is you're an ally.
Yeah.
So you're on their side.
Yeah. And if you're working with a broker, right? So we talked about this in previous episodes. If you're an exclusive agent, you only write with one company.
Exclusive meaning like an Allstate, a State Farm.
Yeah. So your price is your price.
They got one option with you. Otherwise, it's hit the road, Jack.
Yeah. And so
don't you come back no more.
If you work with an independent broker like myself, then you're going to have much more options on the table that we'll be able to look at and decipher, right, as to what the best option might be.
Okay, got it.
And so starting with that email or a phone call, hey, I got this. This is crazy. What can we do, right? And there's going to be some things that you possibly can do with your existing policy that might be able to save you or at least cut into that increase in a sizable way.
Hey everyone, this is Tim, your favorite Bricks and Risk co-host. But don't tell Sean. I hope you're enjoying this episode, and I'll get right back to it in a moment. Our audience grows through word of mouth, so if you would please take a moment of your time and give us a review on the platform you're on, that would be fantastic. Please also help spread the BNR word by sharing your favorite episode with a friend. We greatly appreciate your time and trust. Now, back to the show. Let's talk about auto, okay? In auto, someone comes to you and says, how can you help me? My auto insurance premium went up. What are some things that someone could consider with their policy with you that would help them keep things similar, let's call it, without, messing with the coverage too much that they're really at a much larger risk?
So, number one, it's the billing, right? I think a lot of people just think that their policy is what it is, right? I get this and I pay this. And one of the big things that people don't realize is that your billing, your payment plans do have an impact on your premium. And what I mean by that is a lot of carriers now out there, they really will credit your policy if you can pay that policy in full.
Really? I don't think I even knew that.
Yeah.
So like it's lump sum versus monthly.
Right.
So you get your auto bill. It was $500 a month. It's what, $6,000 a year.
Yep.
So if it's $6,000 a year and you pay that $6,000 up, the bill comes in the mail. You go online, you pay the $6K. What would be like
10%?
Really? That's pretty good.
It's enough to at least
I didn't even know that.
Yeah. It's enough to at least give it some thought to say, and it's not for everyone because not everyone can just peel off.
Most people aren't in a position to do that.
Right.
But also the people that are really concerned about $50 or $100 a month, in that same example, you knock off 10%. I mean, you're saving some money.
Yeah.
You're saving $50 a month.
Well, and then you put on a credit card and then you get some rewards and then you just pay it off. Maybe you pay off your credit card, or maybe you are in the mode of, we build up credit and then we pay it off. So that may be an option.
Good idea
for some people.
All right. So we talked about auto.
Well, there's other, so that's one. A lot of people get a bill in the mail and they don't realize that going to an auto draft would be another discount.
Really? I mean, I've always done that, but I didn't know that. That's a discount.
It's a discount. Well, with every carrier is different. So you have to, it's a part of the conversation, part of the review process as you're working with your broker to kind of, what I say is go through the policy colonoscopy where you're looking.
Policy colonic?
Yeah. So you're going through the policy, you're looking at coverages, you're doing the review, and you're looking for any available credits that you might have.
Would you say, all right, so you work with a lot of carriers. Would you say it's more common for the carrier to give you a discount if you go with paperless?
Yes.
Okay.
So you're saying, hey, don't mail me anything.
There's two right there, folks. Two chances to save money.
We're not going to pay postage to mail. We're going to do it electronically.
Yep.
We're going to pass on some additional credits to you by doing that.
Interesting.
Yep.
All right. I wanted to jump on real quick. Let's talk about home insurance, because again, that relates more to my business.
Yeah.
And I can give an example from me recently. So on a past episode, I had mentioned that we have 2 bay windows in the front of our house. They're stucco. They have metal roofing. We put the metal roofing on when we did the rehab. It was like an aesthetic look, better life expectancy. A metal roof will last much longer than a shingle roof.
Yep.
And, there are some quirks with it because it doesn't seal as well, let's say, as a shingle roof.
With temperature and everything else, it may shift or pull, expand or whatever that may be.
Exactly.
Yeah.
So we had a leak on both sides, both bay windows, in the last year. And after doing some testing with my general contractor, what's up, Zach?
Zach Torres.
We pretty much pinned it to say it's actually not coming from the bay window roofs. It's coming from the windows right above them, because I've talked to other people in the community and they said, there's like a lot of people have had problems with window flashing. Certain homes, window flashing.
Yep.
So we pinpointed the problem. Couple $1,000s worth of repair work, because the interior, hey, there's water damage. You got to pull out the drywall. You got to re-drywall, spackle.
Well,
tape.
this is an important note too.
Yeah.
Your policy's not going to pay you for new windows.
Right.
Let's be clear.
Yeah, they don't say like, oh, it's leaking. How about a new set of windows? No.
They're not going to do that.
Right.
The policy affords coverage for resulting damage.
So it's really what I'm talking about, the leaking into the drywall. They're like, oh, you had to rip out the drywall.
Yeah.
Oh, you had to tape it. You had to spackle it, sand it, and paint it. Oh, 3 days worth of work, letting it dry, all this stuff. We'll pay you for that. But again, it was so minor, the amount of damage compared to the coverage I had a very low deductible, like $500 or something like that.
Yeah.
I can't remember what it was. And then you had advised me, you know what, you should just take that on yourself. Like, you have good contractors, like you can afford, some money out of your bank account. Just make those repairs. Don't put in a claim.
Yeah.
Because if you put in a claim, now you got a flag, they're looking at you. It's like you put in a claim, $500 deductible for like $2,000 worth of work. They think it's, why are you doing that? So you said, don't do that. But then after, we fixed it, then I asked you the question. I said, well, what if we actually increased our deductible?
Yeah.
Which to most people be like, why would you do that?
Yep.
Like, if something goes wrong, I want it to be $500. That's all I want to pay. I only want to pay $500. And we increased our deductible to like a few thousand.
Yeah.
Because how I looked at it through your advice was that this was a few $1,000s. The next, if it happens again, I would do it again for the reasons I just mentioned. Therefore, my deductible doesn't matter. And having a higher deductible is also going to lower my monthly bill, my annual premium for my homeowner's insurance. So it really, like, going through that event, asking you for your advice, you saying like, no, you got to go out of pocket on this one, actually ended up being a blessing. Because now I'm smarter about, oh yeah, that's how the insurance company would look at it. Because again, if it's $500, it's like anytime there's anything that goes wrong, it's going to be more than $500, and I'm a claim risk, and therefore they don't like me.
And everyone out there, not everyone, a lot of people watching this are thinking to themselves, this agent, he doesn't want you to put that claim in.
Or
right?
she.
He or she. And it's not the truth. The truth is, if you called me and said, I've got $15,000 worth of damage, I'm putting the claim in for you.
Would there be some people though that maybe push back a little bit? They just don't want to do it.
What do you mean?
Like you had said, they don't want to put the claim in. There probably are characters in insurance that might not want to. Would you say that's true?
That don't want to put the claim in?
Yeah.
Oh, you mean from an agent or broker perspective?
Like shysters.
Listen, there's a cast of characters out there that
just like in real estate, plenty of people just looking to make a couple bucks, and if the customer service isn't there, it's not going to bother them.
Well, here's another important tidbit.
Yep.
When I write your insurance, I am writing your insurance with the thought in mind that I'm going to be the one answering the phone call when you have a claim.
Yep.
And I don't want a bad claim scenario for you, because it's not going to be good, and I don't want that. Are there agents and brokers out there that only look at writing the insurance to get the deal? Yes.
Yeah.
A vast majority.
Yeah, because they're like, I got another customer. Let's just push it through. And if
I don't care about
if
the
they
coverage.
complain, whatever, they can complain to the customer service line, not to me.
And if they want to put a claim in, that's great, because you know why? They're not going to be able to move. Then they can't move the insurance.
So now they're stuck.
And they're locking in that client.
Oh my gosh. Wow.
Yeah.
That's crazy.
So insurance companies used to underwrite for homeowners specifically for 3 years. And they look back. It's a look back 3-year window. Have you had any claims in 3 years?
Okay, so 3 years is kind of like your sample
window.
Yeah, your window.
Yep.
Okay.
Well, that's what it used to be.
What's it now?
Well, it depends by carrier.
Okay.
Most are 5.
Wow. So if you made a mistake 5 years ago, they'll...
It's not a mistake. If you had a claim.
Claim. Let's call it a claim.
A paid claim.
Which people think they should do when they have insurance. I should make claims. That's why I have insurance.
Totally within your rights to think that.
Yep.
Are you doing what's in the best interest for yourself? May or may not be.
Yep.
Some carriers, 7 years.
Wow.
And I've seen most recently one carrier go back 9 years.
You know what this reminds me of? What
does this remind you of?
This reminds me of the short sale foreclosure crisis of the Great Recession. So like 2008, 2009.
Were you involved in that?
Hey, I was in the mortgage industry at this time working for a builder. I was working for Pulte Homes, so their mortgage company, Pulte Mortgage.
Yep.
And I saw people getting loans left and right. It's not my decision. I'm not selling the homes, nor am I even selling the loans. I just manage the actual customer service process and a team of loan officers. And there were a handful of people. I'm like, they really shouldn't be getting this loan. And I remember having conversations with people, and they were really just trying to push this through. And I remember just like talking, like, again, I don't want to hurt the company I work for. You know, I'm an employee. My job is to get people,
Don't rock the boat.
is to help sell more homes and have people use our mortgage company. But I remember talking to a few people. I'm like, are you sure you want to buy this home? Like, your interest rate has gone up 2% based on where you started this application, just because you have a low credit score.
Yeah.
You know, you got some judgments. I understand you might not want to lose a deposit, but are you sure you want to do this? It's less affordable. And people would just be like, yeah, I want to do it.
Yeah.
But like the short sale foreclosure crisis, when people were short selling homes, what happened is they would have like a ding on their credit for somewhere around, don't quote me, about 7 years.
Yeah.
Meaning that if you bought a house and it didn't work out, you couldn't afford it anymore, you go to sell it, now it's worth less than what you paid. Plus, when you sell a home, there are transaction costs. You got to add on money on top of that to even sell it. So if it's worth less and it costs money to sell it, you would come to closing with like $20,000, $30,000, $40,000, let's say, in some of these scenarios.
Yeah.
No one's going to do that.
Yeah.
So the short sale process allowed people to sell their homes that they couldn't afford or didn't want to someone else who would buy it. The bank would take less than what they lent, but what they would do is they would ding the homeowner, the seller, the person who sold the home for about 7 years.
Yeah.
They're like, don't try and get a mortgage again because you can't. And people would be like, fine, let's go rent. I'll go live with family. If I marry someone or if I'm already married, I'll put it in my spouse's name. Like, there were workarounds, but the insurance companies going from 3 to 5 to 7 to 9 reminds me of that because they're looking at it as like they want to keep record of you for an extended period of time, and they don't want to let you off the hook.
Well, it shows a behavior. It shows a pattern.
Exactly. Yep.
Right. So if
credit history,
if you had a claim 7 years ago and you had another claim 3.5 years ago, chances are you're going to have a claim in another couple of years.
Right.
It's just,
maybe tomorrow.
Actuarial, if you look at the pattern. So they're definitely changing the way that they underwrite people, specifically for claims when it comes to homeowners. And I think that in my scenario, like, I'm talking you out of that claim. I'm not telling you not to put the claim in,
right,
but I'm trying to have you look at it from 360 degrees. And I often tell people, when I'm advising you, I'm telling you what I would do if I was in your seat.
Yeah, if it were you, this is what I would do.
It's a recommendation. Now, you may say, I'm going to roll the dice. This is what I want to do. I talk to my spouse, and we do want to move forward. That's fine. It's actually, the funny thing is, like, I just explained that scenario where agents are like, yeah, file the claim. That's great, because they can't go anywhere.
Right.
I'm actually advising you not to do it. So I'm actually, like, I don't want to say like hurting myself.
Yeah, you're looking out for the client, not necessarily for like the transaction. This just came up in the Staywise episode. Do you remember he was talking about, hey, if you put $1 in of paint, you get $2 back, which I totally agree with. But if your roof is like, let's say it's a 25-year shingle roof and you're at year like 20 and someone says, I'm going to put a new roof on. Ryan had said, he's like, you don't really need to do that. It's one, it's not leaking.
Yeah.
And two, it might have a couple more years left. So you're almost telling people not to do it, even though they want to do it.
But hold on, this is exactly the same, because in Ryan's scenario, if you think about that scenario, if that client who's selling the house puts that roof on, it's actually better for Ryan because it's probably going to sell at a higher price,
make more money,
and more people would be inclined to buy that home.
Right.
So
maybe not, but still,
the chances,
the listing price will be higher for sure.
Correct. So Ryan is advising the client to basically, how do I put this in a way?
Don't improve your home.
But like, to the disadvantage of myself.
Yeah, exactly.
Right. So it's better for you. It's not better for me.
Yeah, he's not looking out for himself. He's looking out for the client.
Right.
I wouldn't do that. If it were me or my house and I were selling it and I know there's a couple years left on this roof, I'm not going to do it because I want to wait until someone inspects it and they may not even have a problem with it. They may say, your price is fair. The roof's got 5 years left. I'll buy it anyway. If you assume that they're going to have a problem with that and you spend 25 G's on your roof and they come in there and they don't care, they're not going to give you your 25 G's back. That's not how it works.
So similarly, there's real estate agents that will advise clients
Right.
to do what's in their best interest.
Yep.
The same with insurance agents and brokers.
Right.
We as our brokerage is always going to try to advise in the best interest of the client. Like, when you talk about financial advisors and there's that, fiduciary responsibility, it's almost like that. Like I feel like we have a responsibility for our clients to look out for their best interest.
Are you guys considered fiduciaries like contractually? Do you know?
No,
is there anything that
we
says?
are not.
We are. So real estate is.
Yeah, we are not.
Dude, it really all of this really, the crux of this show. This is a show now, folks. Like we have hit the point where people are calling this a show. We got regular listeners and watchers. People enjoy getting this every week. Part of the foundation of the Bricks and Risk podcast, our show, is relationships. Relationships stem from trust. If people trust you, they will continue to do business with you. They will refer you to friends, family, neighbors, and you're probably going to be friends too. So it is like a triple win. Relationships. Here's a question. So we have a note here that says like, it's starting to be like losing the whole reason that someone has insurance.
Yeah.
Like, let's go back to that example. You're telling me to raise my deductible? Like, my right as someone who's insured is to put in a claim when I want to put in a claim. If I got $2,000 of damage in my house, I'm Tim. I just had the $2,000 of damage. It's my right to put in a claim because I got a $500 deductible. Why wouldn't I do that? I pay you every month. I pay you on time. I never put in claims. So it's like losing the whole reason you have
Let me
insurance.
give you a
Speak
recent
to that.
example that we just had with a client who's buying a place in Florida.
Okay.
Right, maybe like 45 minutes outside of Clearwater. He calls me up and he says, hey, Sean, I'm buying this place, and the new guy, the agent down in Florida, put it in, put our history in, pulled our claims activity. And he goes, there's a claim from 2021. He goes, I didn't have a claim from them. I go, I don't know. Let me pull it up and shoot it to me and I'll take a look.
Yep.
One of our very good clients, Steve Bregman.
What's up, Steve? I don't know you, but what's up, man?
He is a listener.
Yeah, what's up?
And we just had the conversation. He's going to be moving to Florida, but it was the conversation of, hey, we started out as, a client and have gradually moved towards being friends.
Nice. Is he GF too, or does he drink beer like normal people?
I think he's a beer guy, if I were to take a guess. But it was one of those ones we met like in the mall to do paperwork, years and years
No way.
ago.
Oh, that's cool.
Yeah. So anyway, he calls me, we kind of pull it up and we get to the root of like what this was on his record. And his son was washing a dog in a bathtub and it was, he called the carrier, something happened that triggered a claim.
Okay.
And it was minimal damage. So he's like, oh, I don't want to pursue a claim.
Like water got everywhere type of thing.
Yeah.
Like water damage.
I talked to the contractor. We'll clean it up.
Gotcha.
It was a zero pay claim.
What does that mean?
A claim is initiated. It goes onto your report and it states $0 were paid.
So the insurance company paid $0 to deal with that.
Correct.
Gotcha.
Florida agent. Well, because of that, we can't write with like these carriers.
Whoa, just because it's a huge red flag. Dollars, doesn't matter what the dollars and cents are. You put one in, we're going to hold you to it.
So when I tell people that you really need to understand what the tail of that claim is, like how that impacts you right now or a year from now or 2 years from now.
Yep.
You have to understand that we're in a position when I tell you, I never say don't put that claim in. I always say you may want to consider not putting the claim in because of X, Y, and Z.
You're like, let me give you the Steve example.
Right? And so, because it's to your benefit.
Yeah. You're trying to look out for them. Like, your whole goal is to make sure people are insured.
Correct.
If they can be insured and save money, great. If they can be insured and save money and work with someone like you, who's an ally, even better.
Yeah.
But that's really where the relationship comes in here. It's you're in it for the long haul, and you want them to be there with you. And
well, I want to pick up the phone when there's a claim, a bad claim.
Yep.
And be like, don't worry about a thing.
Yep.
It will be taken care of. You have the right coverage. And so that's what my North Star is.
Yeah,
that's what drives.
I don't want to ruin your day, your week, or your month.
Yeah.
That's awesome. All right. This one was awesome, man. Why don't you close us out?
Yeah. So we have our streams up on Apple and Spotify.
Yes, we do. Ooh, and Spotify now. We have videos on Spotify if you're a Spotify fan. So if you pull it up and you don't normally listen to Spotify, you can watch the video. And we have clips. We're on their beta test.
Man, I forgot about that.
That's my end of the broadcasting. I do the video to Spotify, and I do the clip with a little sentence underneath, a little extra juice.
I wonder if we were in their top 50% of year-end video podcasts.
We were 20.
Top 20% on Spotify.
Love it.
That's great. So reach out, write a review on Apple or Spotify, drop us a note, shoot an email, bricksandrisk@gmail.com. We'll be sure to read reviews online if you do that. And you can find us on social media, Instagram, Facebook, LinkedIn.
And YouTube right now, our subscriber count is really going up. And YouTube's a great one because if you subscribe, you get all the shorts, you get the updates, you get the update when the episode comes out. So if you prefer to watch and not to listen, and you don't want to pay for a streaming service, YouTube's where it's at.
Go out and find us on YouTube.
Yeah. All right. Well, that's all we have for this one, folks. Thank you for tuning in again to another episode of Bricks and Risk. See you soon. Thank you for joining us on another episode of Bricks and Risk. Our goal is that you walk away with 1 or 2 valuable nuggets, and we greatly appreciate you sharing your time with us today. You can find all B&R episodes on Spotify, Apple Music, YouTube, and anywhere else you get your podcast content. Until next time, keep learning and keep growing.